welcome back. Today we're going to jump in and have a look at the A2M MILK latest interim report that just got released this morning before the market opens, or depends when you're watching this, maybe watching this evening. We'll see what happens when the market opens today. Just going to be looking at the key highlights from this latest report that got released, like I said, on the 25th of February 2021. Let's jump into it and have a quick look at what we've got here. So the presentation dated 25th to 2021 provides additional comment for the interim report for the 6 months ending 31st of December 2020 of the A2M MILK Company. So let's just get straight into it here. Scrolling down here, David Borossi, I'm sure I've said that wrong, he's the new CEO that's recently been appointed. This is one of the key things we want to look at the top here. So fundamentals remain strong despite significant COVID-19 disruption. So total revenue of 674.4 million, down 16%, and EBITDA of 178.5 million, down 32.2%. So that's about what they were forecasting from their latest, from their last interim report. I think they were saying 670 million for their forecast. So about where they sort of were thinking. Not too bad. I'm glad that hasn't come in at 400 million or something. So EBITDA margins there, 26.4, excluding the Mataura Valley Milk acquisition costs. Let's just keep scrolling through this. Just going to look at the key highlights here, guys. I'm going to leave a link in the description if you guys want to jump in and have a quick look at this as well, which I highly recommend. Key financials. So this is just looking over last year's as well here. So the first half of 21 coming in revenue at 670.4 million, and that's compared to last year of first half of 2020 of 805 million. So 16% decrease there. Gross margins also slightly down, 26% down. If you ever see these brackets here, that means that it's a negative, okay? Just a little fun fact if you didn't know. Just going to keep scrolling down through this. Net profit after tax. So yeah, a lot of negatives here, but there's no general surprises here. This is about what we were sort of expecting, and I feel like most of this will be priced in, but we never know. We may see, we'll see what happens when the market opens this morning. Just going to be pretty much skimming over a lot of this here, guys. Robust balance sheet here, investment in strategic assets. So cash on hand of June 20 at 854 million cash on hand, whereas now they have 774.6 million cash on hand at the end of December 20. Closing cash balance of 774.6 million. Increase in working capital of 147 million due to the increase in inventory and reduction in accounts payable. Acquisition of KY Valley Milk Processing Facility of 16.4 million. Then they actually participated in Synlait's recent capital raising of 39.8 million, while still maintaining that shareholding of 19.84%. And also the Mataura Valley Milk acquisition, which I've done a video on that if you guys want to check that out, will be funded from cash reserves as well, which I think was around the 280 million from memory. Balance sheet strength provides capacity to grow strength opportunities. Let's keep going down here. Regional performance. Revenue composition across infant nutrition channels, China label increasing, strong China label infant nutrition growth in line with strategy. Like I said, guys, I'm just going to be skimming over a lot of this here. China label revenue growth. So they're continuing to invest in the brand and engage with consumers in China. Looks like they've been doing a fair bit of heavy marketing here in China. Challenging first half of 21 for English label infant nutrition. Look, I don't know a lot about this label infant nutrition here, but it's something I want to probably go and do a little bit more digging on, and I'll make another follow-up video if I find enough on it. Cross-border e-commerce. Plan in place for second half 21 to reactivate the English label infant nutrition channels. Just going to keep scrolling down through this, guys, pretty fast. Just quick snappy video this morning. Results, North America results driven by change in execution approach. Impact of COVID-19 in the US market overall has been significant. During 2020, it was observed that consumers were becoming more value conscious. So just looking over this here, it looks like they've brought back their more affordable premium pricing for their North America positioning of their pricing at a more affordable premium level and stepping up in store activation. And they have over 22,000 stores in the USA and all the big names that you've all probably heard of: Walmart, Target, Costco, Whole Foods, and some other ones there I'm not too familiar with. But they're only sort of just getting into America, so that's a good area for growth for A2, I feel. Continuing to strengthen our supply chain capability with the Mataura Valley milk investment. So this is what I said in my last video. So in August we made a non-binding indicative offer to acquire 75% of Mataura Valley Milk. So it was the 207 million, like I said earlier, and the other remaining is with the husbandry country in China. So there's strengthening the relationship between both countries, which is great, I feel, for A2. Good thing they just quickly touch here on the sustainable business for the future, which is good to see that in the report as well. Here we are, guys. Going to have a quick look, sort of focus on the second half of 21 plan and outlook here for the future, or where they're forecasting. Summary of second half of 21 plan. So grow China label infant nutrition, continue to invest beyond the brand and in market capability to gain share, reactivate Australian daigou resellers and retailers, rebalancing inventory levels and improving traceability through the channel, providing temporary support to the daigou resellers, working with corporate daigou to drive distribution innovation, optimise CBEC, rebalancing inventory in the channel and refine promotional approach, maintain leading position in the Australian liquid milk, continue to invest behind the brand to maintain share, drive towards meaningful scale in the US liquid milk. I'm just going to keep scrolling over this here. So the outlook for the rest of 21. Globally, there continues to be unprecedented levels of uncertainty and volatility due to COVID-19. The company remains confident in the underlying fundamentals of the business and will continue to invest behind the brand and its capability to drive long-term growth. However, the pace of the recovery in the daigou reseller channel as the CBEC channel has been slower than previously anticipated. So how they were saying the second half of 21 was going to pick up, maybe it's not going to pick up as much as they sort of first thought there. Accordingly, the company's financial 21 look is now as follows. Group revenue for financial 21 in the order of 1.4 billion. And group EBITDA margin for FY21 of 24% to 26%, excluding the MVM acquisition costs. So the outlook for 21 assumes that the actions being taken to reactivate the daigou reseller channel delivers a significant improvement in quarter-on-quarter growth for third quarter 21 to fourth quarter 21. And that's going to wrap it up there, guys. Like I said, just a real quick overview here of the latest announcements. Like I said, I'll leave a link in the description below for this so you guys can check it out as well. If you enjoyed today's video, guys, much appreciated. Hit that like button. And if you want to see future videos like this, make sure you hit that subscribe button. With that said, guys, we're going to wrap that one up there. We'll catch you in the next video. Cheers, guys.